Welcome to Fibocan's YouTube channel. You have done the right decision in your life by coming into Fibocan's YouTube channel. Who is Fibocan? Fibocan is a wealth enabler. How do we enable wealth? We enable wealth through training, coaching, mentoring, enabling students, investors to devise their own investment strategies through our comprehensive training programs and innovative investment strategies. So what do? We have published educational videos 1 to 16, module 1 to 16 in English and Tamil. The modules that start from basics of banking, capital market, investments, how to do investment, technical analysis, options, futures, then strategies of options and futures, and finally income tax on derivatives. To begin with, all these 16 modules are available both in English and Tamil. I would request you to go and select the appropriate playlist and watch all the videos and put your comments. So that is the step one. Every day we put videos about market commentaries. Please understand that we are not SEBI registered. Hence, we cannot give any recommendations. We will say whether it is looking good, technically sound, technically weak, has to be cautious. These kind of things we will give, but we will not give any price targets, or we will not give any stock recommendations. Only thing is that we are here to give technical education, imparting technical knowledge to anyone and everyone through our free educational videos, which we put every day on the daily markets, and during weekends we put about global markets. So I would request and encourage anyone in the age group of 17, 18, those who are studying in HSC, higher secondary or plus 2, to watch module 1 to 4, definitely either in English or Tamil, whichever language you understand out of these two languages. And anybody who is doing BA, BCom should watch up to module 8. And those who are doing MBA, CA, CFA or any professional or postgraduates should watch up to module 15. And for professional traders, it is ideally suited for them to watch module 16. I am sure that you will enjoy watching and enhancing your knowledge. Thank you very much. Today is January 23, 2024, Tuesday. Option expiry for FinNifty. First the levels, then what happened? Before we go into the levels, the last 3-4 days we didn't put our videos because last week there were some personal issues, and Saturday it was working, not working. Then we wanted to put the global markets. Then Monday we were busy with Ram Leela, consecration and other things. So hence we couldn't put our videos. So today we are putting our videos. So apologies for that. But yes, today also we have some personal work, but still we thought we'll put the video before we go into our personal activities. FinNifty closed 137.05, 1.97% down. Yes, you heard it right, around 2% down. BankNifty 45015.05, 2.26% down. And Nifty 21238.80, 1.5% down. So BankNifty, FinNifty, everything formed solid red candle. In fact, everything opened a gap up. So Saturday what happened? There was a trading. So in the trading what happened? Market went up but couldn't sustain above the Bollinger middle band and then came down and closed slightly over there. Today what happened? It opened above the opening of Saturday. Saturday's opening above which it opened. And in fact Saturday's high also it took it out in all the three indices. What are the three indices? FinNifty, BankNifty and Nifty. So hence one would have thought that yes, it is going to go up. But slowly but surely it started drifting down. Why? Right from the word go, HDFC Bank was significantly down. Then ICICI Bank followed up. Axis Bank was holding for quite some time, but that also started falling up. The only thing that held today was ICICI Bank, which at one stage was slightly high, but it gave up all the highs during the course of the day. So in the process, what happened? BankNifty and FinNifty has broken almost all the major levels one can think of. What are the major levels? 50-day simple moving average, 50-day exponential moving average, 100-day exponential moving average, and 100-day simple moving average. Everything is broken down decisively. Nifty, on the other hand, is still above the 50-day simple moving average. Hence, now we can expect some sort of support coming for Nifty at that levels. So overall, it was a significant bad day for people who have gone long. But as always, for smart traders, it's a good day. It's yet another money making day. That's all I can say. So that is why I insist that people should learn technical analysis, because what happened, people say, oh, suddenly it fell. Nothing happened. What happened, if one were to read the chart carefully, 4 days back it went below the Bollinger Lower Band, then 2 days it went up. Today what happened, in the process of opening gap up, and they tried to go up above the exponential moving average and the 50-day simple moving average. Normally what happens, these levels act as a very powerful resistance or support, as the case may be. Now the 50 simple moving average is above. Hence when the stock price went above there, either it should have decisively taken it out, then yes, that would have acted as support. But because it was not able to take it out, from there it fell significantly. From there it was just one way fall throughout the day. In fact, at one stage the option prices were skyrocketing, the put option prices, and in fact a lot of put option buyers would have made merry, and sellers of put option would have been in deep trouble today. So that is what the situation is. So Bank Nifty overall, because HDFC is not supporting, Nifty is down, Bank Nifty is down, Nifty is down. Here one more thing which we want to tell. People will say, in fact I see today also, many people are jokers. Either if they have to be fundamental analysts, they have to say fundamentally this is quoting at this price, this has to quote at this price. That's all. They have to leave there. Then I will respect them. But then they try to talk technical. How? They say, no, this is a good price to enter. No. What happened? HDFC, one has to be extremely careful. Why? Because the previous year's low has been taken out. In fact, I have told in my video last week, 1460.25 is the previous year's low. That is 2023 calendar year low. That is broken down decisively. That means in this year, don't expect any appreciation, significant appreciation in this year. In fact, it might end up going further down by the end of this year. And not only that, if this trend continues, probably one more year or another 2 years, there might be sideways movement, or with a slightly downward bias. Why? Because in the yearly chart it will try to go down and touch the exponential moving average, from where it will bounce. That is probably 2026 or so. Hence no, one has to be extremely cautious. That is what I would say technically, unless otherwise something dramatic happens in this 6 months or so, which I don't see. Dramatically positive thing might not happen. Negatives can happen. Lot of negative things can happen dramatically. That is what it is. So with that, let's go into the discussion part of it. So let's go into the discussion part of it. Kotak Bank fell 1%, 2% fall in Bandhan Bank, Federal Bank, HDFC Bank, Bandhan Bank, sorry, only Bandhan Bank 2% down, 3% down in Access Federal and HDFC Bank, 4% down in SBI and AU, 5% down in Yes Bank, 6% down in IDFC and IndusInd Bank. ICICI Bank was the sole performer, moving up by 1%. In fact, today hardly 3 or 4 stocks was in positive, and 2 or 3 stocks was neutral. Almost every other stock was in the negative territory. In the financial, Shriram Finance 1% down, Jio 2% down, Muthoot and LIC Finance, LIC Housing Finance 3% down, along with the Bajaj Finance and Chola. 4% down in L&T Finance, M&M Finance, Manappuram. 7% fall in IDFC. Insurance and cards, ICICI Pru and SBI cards 2% down, HDFC Life 3% down, SBI Life 4% down, LIC 6% down. Oil and Telecom, Reliance 2% down, while Bharati moved up by 3%. In the IT, Cofor, HCL, LTTS, Techem 1% down, Wipro and Emphasis down 2%, Intellect 5% down. So IT today was holding, because Infineon TCS was holding, but I feel that IT is also losing steam, and one has to be extremely careful in IT stocks here. Amateurs, buyers, please do not enter at this time. On the consumer goods, ABFRL, Nestle, Titan and Tret 1% down, Britannia, ITC, Page 2% down, PVR, Asian Paints and Bata 3% down, Colpal 4% down, HUL 5% down, and HUL 4% down, Berger 5% down, Pidilite 6% down. Automobiles was a big down day. Maruti Motors and TVS Motors 1% down, Ashok Leyland, Bharat Forge, Eicher Motors, M&M and Tata Motors 2% down. Hero was the sole winner, moving up by 1%. On the metals, JSW 3% down, Tata Steel and Hindalco 3% down, Jindal Steel, NMDC, SAIL and Vedanta 5% down, Coal and National Aluminium 6% down. Health and Pharma, Divi's 1% down. Dr. Reddy's 1% up. Sun Pharma 4% up. Cipla 7% up. That is a sole winner. In the others category, Eris 1% down. Godrej Properties, Ultratech, L&T, Zomato 2% down. Adani Enterprise, Polycab and UPL 3% down. Adani Ports, Havels, Indigo 4% down. DLF, India Mart and MCX 5% down. IRCTC 9% down. Z Telefilms 32% down after the merger with Sony did not happen. Hence, though Z was technically looking good in the yearly chart, but unfortunately the news of merger not going to happen has broken, and due to which it had a massive fall, and from this year, from what it appeared as technically good has become technically weak, unless otherwise something dramatic happens. Okay, with all these things, what do we expect for option expiry day after tomorrow? Tomorrow is not Bank Nifty option expiry because it is a month end. Hence, the option expiry is going to happen for both Bank Nifty and Nifty on Thursday. The levels. See, 50-day exponential moving average for Bank Nifty will act as a resistance because it has broken down that decisively, below which is the 100-day simple moving average, 100-day exponential moving average. Hence, it has to go above all those things. Then the 50-day exponential moving average, which is somewhere at 46,482. These levels are dynamics. I'll be more interested in the levels, which is 50-day exponential moving average. That's a very powerful resistance now. On the support side for Bank Nifty, the first support is at 200-day exponential moving average, which is at 44,542, which is 500 points from this current closure. If that is broken down decisively, then the next level that is available is the 50-week simple moving average, which is at 43,171. Hence, one has to extremely be cautious and careful. Nifty, on the other hand, for the resistance is going to be 2023 close, which is 2731.40. The support is going to be at 50-day simple moving average, which is at 2935. Because Nifty is relatively strong, hence the 50-day simple moving average is slightly above because the price itself is above that. Hence, that will act as a support. Thank you very much.